Hello and welcome to Market Open Direct Connect, where companies and investors get right to the point of the news that matters, what it means, and how it impacts your investment. I'm your host, Stuart Walters, and we're joined here today by Dr. Mike Jones, Managing Director of Impact Minerals, ASX code IPT. Following this presentation, Mike will be available to answer any questions you might have, which can be submitted through the Q&A tab at the bottom of your screen. Without further ado, it's time to introduce our guest, Mike. Welcome to Market Open Direct Connect. Over to you.
Sure, thanks very much, and thanks everybody for tuning in today to listen to an update on Lake Hope High Purity Alumina project, which is Impact's flagship project over the next few years. And if we could go to the first slide, that'd be great. And we'll show you the disclaimer, that's right, and there's a forward-looking statements here. And I'm going to start off talking about what we call the Devil's Vortex, the Devil's Vortex of junior exploration companies. This is I generated this on AI, and it's designed to show you that the natural trajectory for most junior exploration companies is for their share price to go down very low, if not to 1 cent and below. And we call it the Devil's Vortex because once you're in that vortex, it's a very difficult thing to get out of. And the reason it's difficult is that what we're trying to do here in terms of discovering new mines, new minerals, and that are a critical part of the energy transition that we're going through is that it's actually a very difficult thing to find a mine. And it's even more difficult to find a mine that's worth anything, and in particular, a world-class mine. So it's not a derogatory comment about the industry. It's just that what the business that we're in is very difficult to be successful. And once you're in the vortex as a junior exploration company, it's very difficult to break out. And the thing that you need to get out of that is a discovery. And we think we have a significant discovery as such. We think it's a world-class deposit, the Lake Hope High Purity Alumina project. And a good example of two companies that got out of the vortex over the last couple of years is De Grey Mining, who made a massive discovery, 10 million ounces in the Pilbara. And that's an interesting story in its own right, because when I was a young man, we were taught never to go to the Pilbara looking for multi-million ounce deposits. And the second one, even more recently, and again, actually, funnily enough, in the Pilbara is Azure with their lithium discovery. Both of these companies got to $1 billion market cap after nearly 20 years of trying. And so you need something like that to break out of it. And we think that Impact Minerals Lake Hope project is going to get us out of that vortex. So why do we think it's world-class? If we move to the next slide. This is Lake Hope, and it's about 500 kilometers east of Perth. And amazingly enough, in the top 2 meters of that lake is something in the order of about $20 billion of a mineral that's not widely known, but is actually a critical part of the energy transition, and that's high purity alumina. And we're in a joint venture with this project, and I'll leave you to look at the details of that. But by the end of this year, when we complete the pre-feasibility study, which is our main focus at the moment, then we will own 80% of this project and the intellectual property behind it. Next. And the reason we think it's world-class is from the results of our scoping study that we put out in November last year. And won't dwell on the details of the numbers here, but for what we call a benchmark production rate of 10,000 tonnes per annum of HPA, the key figure here is the NPV. And just next in through there. And we see there that the current net present value of that deposit is $1.3 billion. So what that means, what's an NPV? Net present value means that in theory, if someone was to come and write a check out right now for the value of that deposit, it's worth about $1.3 billion. And the other key figure is in the bottom right-hand corner there, which is the production cost, sorry, bottom left-hand corner, next. Is the production cost. And you'll see there that in US dollars, we can produce HPA for something less than $4,000 a tonne. And that's very important because, as we'll show you shortly, this is actually one of the lowest cost producers of HPA globally. And we believe that that is actually going to drive the value of Impact over the next few years. Next. So current share price, actually, we dropped a little bit with 2 cents. We've just done a placement at 2 cents. We were trading at sort of 2.3, 2.4 cents. And we've come back a little bit since then. But what's interesting is that since November, next, when we put out the scoping study, we're up about 70 to 80% next. And we're currently sitting at a market cap next of 60 million 60 million Australian dollars. So when you compare that to the value, the NPV next, which is sitting at $1.3 billion next, then you'll see that there's a potential, significant rise in the share price from here as we try and fill that value gap over the next 2 to 5 years next. There we go. So next slide. So what's going to drive that is the low cost of production. So what we're showing here is a cost curve analysis, and we've sort of projected ourselves a few years into the future, and we've got the incumbent producers, which are the Chinese and the Japanese. They have the dominant, very dominant market share at the moment, and we can see that their production costs on the left-hand side here are somewhere between $15,000 and $20,000 a ton. And that's because they make their HPA by mining a bauxite, converting it to aluminium metal, and then taking the aluminium metal and refining it again into high purity alumina. It's a very cost-intensive, energy-intensive, and environmentally unfriendly process. And that's driven a few companies over the last decade to look at alternative methods. And the real standout player in this field is a company called Alpha HPA. That's their code there in the middle left. It's called A4N. They've done a great job. They're now in small-scale commercial production, and their production costs are significantly lower than the incumbents, and that's really helping them enter the marketplace. And Impact, as we can see, at $4,000 should actually be even cheaper than Alpha. So we believe that the driver here, and that's going to open up the entry into the HPA marketplace, is that we're going to be able to produce HPA at the lowest cost globally by quite a reasonable margin, we believe. Next. Now, what is high purity alumina used for? And two main uses. The first one is actually, for those of you who have Samsung phones, you might recall a few years ago that they were exploding in people's pockets. And also we have Tesla batteries that are catching on fire. And that's because HPA is used as a separator and as a coating on anodes, between the anode and the cathode in batteries, and as coatings on some of the anodes and cathodes. And the reason for that, it has a very high melting temperature, and it's also chemically inert. And so what it does, it prevents heat buildup in the battery. So as we know, batteries are really just a chemical reaction. There's a lot of heat generated, and you need to separate the heat from traveling through the battery. So if the battery's poorly made and the separator peels away from the edge of the battery wall, it causes thermal runaway. And this is why we get these explosions and fires happening in the batteries. So that's a crucial part of the lithium battery architecture and other architectures as well. Next. That's a slide there. The next use is LEDs. So most lights, LED lights now, they've all got HPA in there. And in the USA last year, they banned incandescent light globes. So all new light globes going in the USA are LEDs. And that's a significant growth demand over the next decade, obviously. And also next, we'll see that it's widely used in LED screens. So your smart screens, your OLEDs, your ULEDs, and increasingly in micro LEDs. There's a massive demand increase for those screens over going forward. And also not so much of a large volume, but certainly a very significant portion and good margins to be made in sapphire glass. Next. Which is used as mainly screen coatings, screen coverings on your Apple iPhones, your tablets, and increasingly on laptops. So it's a big growth area, and that's shown in the next slide. So this is a classic sort of supply and demand curve. We've got demand forecast in the blues, and then we've got supply on the in the bar chart underneath. And we can see that around about 2026, there's a forecast supply deficit next. And that's due to the fact that we strongly believe that as the market grows, and it's currently growing at about 20% per annum overall, that the demand, that there's increasing offshoring and friendshoring. So we see that the Chinese supply will probably drop off, and increasingly supply from the Western sources will become important at around about that date. Next. So what is high purity alumina trading for at the moment? So the benchmark is 4N, so that's 99.99% purity, and it's trading for anywhere between $15,000 to $25,000 per ton. and so at an average of $20,000 per tonne. So there's quite a lot of money also to be made in the 3N space. They're not quite as pure, and there are some very good margins in the 5N, ultra pure material, $25,000, $50,000 plus per tonne. However, the volumes there aren't great, so we're very much focused on producing bulk HPA at a very fair cost in that sort of $15,000-$25,000 per tonne range. And if you recall, we're hoping to make it for $4,000 a tonne, so there's some very high margins to be made there if we can break into the business. Next. So how much HPA do we have? Well, alumina. So in the top 2 meters of that lake, I mentioned $20 billion worth. So give or take, we've got nearly 1 million tons of alumina, which can be converted into HPA. And that gives us a 10,000 tonne per annum benchmark production. We've got well over a 50-year mine life, and that's certainly one of the things you want to see in a world-class deposit. And so there's certainly plenty of material to be mined there. So if you multiply the 1 million tonnes by $20,000 per tonne average, that's where we get our in-ground value of about $20 billion. So it's all a question now of digging it up and then converting it into a product that people can sell. Next. So where are we? So we're located, as I mentioned, about 500 kilometres east of Perth, basically in the middle of nowhere. Of course, Western Australia is one of the best places in the world to be in the mining industry, and we believe that that's going to help us get this project into production in a relatively short period of time. Next. So these are two small salt pans, salt lakes. I'm sure many of you have driven past these across Australia. They're part of a larger system that we call the Lake Hope system, but the resource is hosted in those two lakes, West Lake and East Lake, and you can see the scale there. They're both less than 1 kilometre in diameter. They're relatively small, and there's many of those lakes sitting around. However, these two are fairly unique because of the resource that they have in them. And also there's a natural man-made advantage here, is that you can see a line trending from the top left to the bottom right through there. And that's actually a fibrate that's been pushed in through this area. And that's actually probably be the base of our haul road. And so there's even great access already in place to get to this lake. And it sits about 25 kilometres south of the Hyden-Norseman Road, which is a well-travelled road that'll be our haul road. Next. And so this is Roland Gotthard. He actually discovered the deposit, great example of lateral thinking. He realised that other potential wannabes in the HPA space were struggling to get to HPA. And he thought about what other, and that's from the leaching of clay minerals. And so Roland thought about what other minerals you might be able to get alumina out of, came up with some, designed a process, and then went out and found the deposit. And this is how we actually drilled out the $20 billion worth of material. We used a rubber mallet and a plastic push tube, hammered it down to sort of 1 to 2 meters and analysed the material. And that whole program cost about 60,000 Australian dollars. So in terms of the return on investment on a drill program, that's about the best that you're ever going to see. And this is what it looks like next. When it comes out, it looks like plasticine. And next, and it's actually naturally very, very fine grained. The majority of the material is less than 1 micron in size. For those of you who remember your physics, when you've got particles that small, you've basically got an infinite surface area. And so when we take this material and drop it into the vat, into the processing, it basically just goes straight into solution very, very easily. Next. So this is East Lake, just an example of the grade distribution. And we can see in pink the very high grade material. That's about 27% alumina. And the plan is next, we're just going to drive in off the side of the lake next, and we're going to stockpile material, 3 years worth of supply probably on the side of the lake, and then we're going to truck that material off-site to an off-site processing plant. Next. And so this is going to give us very low-cost mining. Basically, on-site, there is no drilling, blasting, crushing, grinding. It's almost basically direct shipping ore. We're just going to put the material onto trucks, take it off-site. We're only going to leave behind a hole that's only about 1 to 2 meters deep. And so therefore the rehabilitation and long-term environmental liability on this project is also going to be exceptionally low. And so that's huge advantages to mining this deposit. And overall, next, the cost of mining is less than 5% of OPEX. And that gives us huge flexibility as to where we're going to build the plant. and also it should speed up the approvals process. We have received our environmental baseline studies. Basically, there are no significant issues with rare flora or fauna in the area, and so that's a real plus for again getting the approvals through relatively quickly. Next. First Nations. So we have a very good association with the Naju people. They're based in Norseman. It's obviously the centre of a lot of mining activity, Norseman, and out through to IGO's very well-known Nova Bollinger mine. We'll be meeting with them very shortly to discuss our plans to lodge a mining lease application. We've already, very importantly, completed the heritage clearance. So we went out and did the survey with the Naju last year, and there are no heritage issues with mining on the lake. And so that's a huge tick for us. And we're looking forward to working with the Naju community to see how we can help make sure that they benefit from the development of this pretty exciting project. Next. I won't dwell too much on the processing next, but we have two techniques that we can use to extract the HPA. Most of the work until recently was done on the sulfate process. That was invented and patented by Roland Gotthard, and that was the basis of the scoping study. But back in February, we put out the results of another process called the low temperature leach, or the LTL process. And we started that process back in November in the lab, and within 3 months, we'd got to HPA, which is probably one of the quickest routes to HPA that anybody in the business has done so far. So we're very excited about that. And so one of the outcomes of the pre-feasibility study that we're doing will be to decide which of those two processes that we will proceed with. We're getting great recoveries throughout, and we do have significant fertilizer byproducts from both processes, and they are a contributor to the low operating cost. And so we're looking at optimizing that work during the pre-feas, as which is what is dominating all of our time at the moment. Next. So the 4 pillars of the pre-feasibility study. First is the metallurgical test work. As I mentioned, we've got these 2 processes. We're full on doing optimization work for both of them and getting towards material that we can hand out to clients in the back end of this year. Next. Second one is mining approvals. This area in particular has been driven by a gentleman called David English. David was the feasibility study manager and greatly involved in the approvals and development of the DeGrussa mine for Sandfire, and also the Nova Bollinger mine, now with IGO and previously with Sirius. And both of those 2 projects are well known for the rapid time that it took to go from discovery through to approvals and development of the mine. And we're certainly hoping to replicate that with David on board with us. Next. Third one is the process plant location. The scoping study was really based on Kalgoorlie being the area for the process plant, but it looks now that Kwinana will probably be the go. There's plenty of land down there. It gives us access to reagents a lot more easily than it would be in Kalgoorlie. So there's a lot of work going on in that, and we'll have an update to the market shortly. And lastly, and very importantly in this space, is getting material out into the market. As I mentioned, we're producing material for the metallurgical test work, and so the back end of this year will all be about getting material into the hands of clients for their qualification and testing, which is required. So what they need to do is they need to take this HPA, put it into their batteries, put it into their lights, put it into their other uses, and see how they function over a 6-month period or so, and that will lead to further test work. Next. So I mentioned Alpha HPA. They've really have knocked it out of the park in this business. A lot of people have tried and failed to get it to HPA, and that's mostly because of the complexities of the processing. And as we've shown, our chemical process is relatively straightforward. There's no bells and whistles in there, and that's driven by the natural characteristics of the ore that we've got in the lake. Next. And so over the last 4 or 5 years, Alpha's market cap has gone from 20 million to recently pretty close to $1 billion. It's held that up there for some time. And so we believe that we can follow in their footsteps over the next 2 to 3 years. So definitely a journey you need to get on board with. Next. So Impact Minerals, as I mentioned, we've got about 3 billion shares on issue. We listed in 2006. recently done a capital raise, so we're well funded. We've got $3.5 million in the bank, market cap sitting at 60 million, which is pretty close to a record, which is great. And as you can see here next, that since we announced the acquisition, we've basically doubled in price over the last 15 months. We believe there's more of that to come. And that sort of shape there is the shape you get at the bottom of the Devil's Vortex. And we believe that we're on our way out on the right-hand side there. And so we hope that you're going to join us on the journey. So what's going to look over the next couple of years? Next. So had a good year last year, put out maiden resource scoping study, and we started the PFS. This year, really, it's about optimizing the test work. We aim to complete the PFS by the end of this year. That's all on schedule. That will trigger us owning 80% of the project and the IP. As I mentioned, the back end of this year is also about getting material into the hands of clients. We will probably trigger the commencement of a build of a pilot plant, which will allow us to produce, I don't know, between 10 and 20 tons per annum of HPA, again, to hand out to clients for their qualification. So we'll move through into 2025 into the DFS, look to get a mining lease granted towards the end of that year or into 2026. And all of that will depend on how our negotiations and discussions go with the Naju group. And so in 2026 into 27, we're looking to build a demonstration plant, get into small scale production, and obviously looking for larger scale offtake agreements. Next. So look, we invite you to come on the journey. We really aim to be one of the lowest cost producers of HPA globally. We've got this unique deposit in a tier 1 jurisdiction. We've got a cost-disruptive metallurgical process. The whole project is now in advanced stages of a pre-feasibility study. And we look really rapidly building out our capabilities in metallurgy and the final product specification. That's very much going to be the focus over the next 18 months. And so by 26, 27, we hope to be able to deliver into this high margin growth market with significant upside potential. It's growing at 20% per year. And we look forward to having you with us. So back to you, Stuart, for any questions.
Mike, thank you. Fantastic presentation, as always. We have had some great questions come through, so we'll get straight onto those. Will there be an upgrade to the resource as part of the PFS?
There will be. We have just completed about 100 more drill holes using the high-tech process that we showed you, and that will feed into a redo of the resource, and we should be able to get to measured, which will a measured resource, which will allow us then in the pre-feasibility study to convert it to a maiden reserve. A possible reserve at the end of this year.
What is the land availability like in Kwinana?
So it's actually quite good. They're still releasing land. Sort of Battery Alley itself is a little bit full, but we don't need to be there. And so we'll actually be driving down to look at a piece of ground down in Kwinana in the next week or so.
Another one that's come through. What are your plans for engagement with the Naju Aboriginal group?
So look, the Naju, I will say, have probably been very poorly done by the mining industry. They are in an area, that's got almost 100 years of mining history there, and certainly a lot in the last 50 years. And they have benefited greatly from their relationship with Sirius Resources and an IGO. And we're looking to, step into that ourselves going forward, and look forward to engaging, with the community at the level, at the community level. So I'll be spending quite a lot of time in the next 12, 18 months socialising this project, getting to know the families in Norseman, and very much looking forward to doing that. It's something I haven't done before, and very much, as I say, looking forward to it.
How long does the customer qualification take?
So this is, it's a bit of an unknown in terms of the full length, but most initial qualification periods take about 3 to 6 months. And then providing that results come through, it can take anywhere from another 6 months to sort of 1 or 2 years, depending on the scale of the project, the scale of the demand and the nature of the product that's there.
There's another one here. If Alpha HPA is a benchmark journey, what were the events that re-rated its share price, do you think?
If you look at their share price graph, and that's a very good question, you can see that it's actually mostly a slow and steady rise up until they were getting close to getting their final DFS out, which only came out just recently, and also the funding that they got from the government. And so when I first got this project, I knew it was going to be a slow burn. As I've mentioned, a lot of people sort of tried and failed in HPA. So far, it's been a fantastic journey for us because of the nature of the processing and the deposit. So it's it's been a slow and steady tick off of milestones that have really driven that price. So going forward, we're going to have a mining lease application lodged shortly. We'll have metallurgical test work coming out. We'll be pushing forward and getting the PFS done by the end of the year and rolling into the DFS. So really, I see a slow and steady climb as we tick off all of these results.
Another one here, the production cost estimate depends on byproduct sales. Does the scoping study use long-term average pricing or current spot pricing?
No, we're very conservative with all of the pricing that we used in the scoping study. So we've used the long-term prices for those. We believe that even without the fertilizer byproducts, that our operating costs would be still less than, say, Alpha HPA, who've also got byproduct credits, by the way, in terms of the DFS that they've put out. And so one of the great things about looking in Kwinana is that there are buyers and sellers for most of the chemicals that we want and most of the chemicals that we'll be producing. So there's a lot of synergies to come out of that development there in Kwinana.
And lastly, bit of a soft one, are you enjoying your job?
Yeah, be careful what you wish for, they say. I've always wanted to build a mine, and now we're doing it. It's like, whoa, there's a lot of work to be done here. There's a lot of balls in the area, in the air. Not only, I mean, if you found a gold mine, 10 million ounce gold mine, you drill it out, you dig a big hole, and you put the processing plant next door to it. With the HPA, it's like, we've got the deposit, but now we've got to work out where we've got to put the plant, and then we've got to actually design the products, and then we've got to find the customers. So it is a lot more complicated, but it's a challenge that I've really enjoyed. We've been doing exploration for a long time in impact, but now we're in development mode. It's really given me a lot of extra energy, and I'm loving the journey.
Good to hear, Mike. Mike, thank you very much. Another fantastic presentation. That's everything for today. I'd like to thank all the attendees for being available and sending in some great questions. For more information about the company, you can follow the company website, impactminerals.com.au, or follow the company on their social media platforms. I'd like to thank you all once again, wish you all the very best, and look forward to chatting again soon.